Hi traders, so this week one of my members asked me how to use a Fib. Fib in the full name is Fibonacci retracement. So I thought, hey, why not just do a lesson on this? So try not to overcomplicate it. When you're using a Fibonacci, I have to remind all of you, I don't use it every single day. And in fact, Fibonacci is sort of a momentum kind indicator. So that means when you're using a Fib, one thing that you have to make sure, the biggest criteria is you have to make sure it's on a trending condition. If the market is not trending, if it's ranging, if it's on a bigger picture range, if it's undergoing some sort of volatility contraction, don't use it. So let's use gold chart as an example. So let's again ask ourselves, what's the logic behind Fibonacci retracement? I see a lot of people try to overcomplicate it. They say some sort of formula whatsoever. What I can say is a Fib for me is nothing like a discounted zone. I know people talk about it as well, but just think about it. The logic is, if the market is on a trending condition, that means we are heavily imbalanced. How heavy it is, it all depends on how crazy the trend is. The crazier the trend, that means if a trend goes like this, is extremely imbalanced. If a trend goes like this, it is imbalanced. If a trend goes like this, it is likely imbalanced. Understand the difference. So a Fib is essentially just like a discount measurement. So when something, just like when you go to the grocery, if you want to buy something so badly, let's say that thing that strawberry is selling at $10 per box per packet. If the expiry date is fine, if the freshness of the strawberries are fine, right now it's giving you a discount of $5, so 50% off. Would you buy it? You will, because nothing's affecting the value and the way you see the strawberry, how craving you are towards the strawberry. The same thing goes to the financial market. If today you want to buy a gold coin for $1, and same quality, same product, they're selling you right now 50% off at 50 cents. Would you buy it? You will. Just like this gold chart. If today you want to buy, you want to go long on gold, you know the value is high, you know long term wise is extremely bullish, you know it's something good to invest. Once it breaks certain level, once you have the imbalance, majority of the people, regardless of whether if it's the big players, the commercial, the non-commercial, the institutions or whatever, they'll still buy it. The difference is just how do they perceive the value of these specific instrument. Just like gold, let's say this is on a massive uptrend, alright, assuming it's super bullish. Each time when price creates a minor retracement, everyone will perceive these as an opportunity to make some money to buy more. So that's why it's extremely bullish. On the Fib, you all can see I only have 0.5, 0.618 and 0.559. The 786, just ignore it, I don't really use it. I only have these three specific level. Why? It's all about personal preference. I like to buy something, or I like to short something, of course trending condition, if it's giving me a nice discount. I don't like to hop onto something if I see a minor retracement. And that's why I always tell you all, just like the current market condition on the yens, let's say on the pound yen, on the 16-hour chart, this thing is, let's say on the 2-hour chart, this thing is extremely bullish. And why did I fail to capitalize on any of these moves? Is because there's no heavy discount. Some of you, if you hear this, you might think, hey, your system is flawed. Why don't you hop onto the aggressive buys? The main thing is all about strategy. When I'm looking to buy something, I like to see a bigger retracement. That's just the way I trade. That's my edge. There's no bargain. There's no debate. That's just the way I like to trade. Just like gold, on this heavy sell. Why did I fail to capture all these sales? Because it's on a heavy sell-off. There's not much opportunity for me to chase it. So a fib, I like to use something in between that 0.5 to 0.618. It's because when price retraces into this, what I call the sweet spot zone, or sometimes if you see me writing something like SSE, it's actually referring to sweet spot entry. You see on my fib, there's a 0.559. That's just a level that I created myself. I like to find the sort of the sweet spot in between that 50% to 61.8% retracement. I just find that majority of time, over 70%, price will still tap that 0.559. So rather than entering at that 0.5, I have a slightly better entry, but it's still above that 0.618. So if you use this case, heavy breakout, a deep retracement, then I go long. Okay, there's no right or wrong. I'll still say this: the stronger the trend is, the more likely it won't tap that 50% or 61.8% retracement. So if you're using fib to trade, just make sure you understand that you don't have to follow my exact sweet spot. I know a lot of people call this 0.5 to 0.618 a golden zone. I don't like to call it that way, but it is in fact a powerful one, because if you are able to utilize fib retracement plus other confirmation or confluences like a break of structure, a shift of structure, then you have the EMAs crossing bearish. So once you combine the EMAs, the breakout structure, the over direction, and combining with the fib, you just have multiple confluence to get in. I'll still say this again: we don't actually need a fib to tell us if the market is giving you a value area, is giving you value to either buy or short. Use your eyeballs. All right, let's say we don't use the fib. All right, we look at assuming this. Does price pull back to the golden zone? No. All right, so also let's begin with, how do you actually draw the fib? Again, there is no right or wrong, but I like to draw the fib based on level that I think it created the biggest movement, the origin of the movement. So obviously, if let's say it's from here to here, it's pretty simple. It's just from the high to the low, or you can also draw it this way. There's no right or wrong, from here to here. But the way I like to use fib is normally to find out the exact resistance zone. I sometimes don't like to use this kind of high. So if let's say on this example, we have a clear resistance printed at 23.96, and we know that is the resistance. If you use the fib to measure from here to here, the biggest question I'll ask you is, do you think this was the real resistance? It's not, right? Real resistance is levels where price had the most reaction, because a reaction or price responses equals to memory zone, means people are actually remembering this level. So just don't use this kind of point and try to find a level where you think, oh, this is the real resistance. So where's the support? So obviously when it comes to connecting to swing low, it's the same thing. Where was the point that price retraces? It was here, or here, it's the same thing, right? It wouldn't change much. Just see that it wouldn't change much as well. So you can either draw it to here or here. Let's assume the bottom. So there you go. There you go. Price goes between that 0.5 to 0.618. The same thing. Let's say market is now back on a. Let's find a trend and let's do it. So all of these are choppy market, just like this one, right? So price formed a sort of a TPF breakout here, broke above that 1946. We have a massive breakout. So where was the point that price first reversed? It wasn't here, it was here. Because of why? Because anything before this massive bullish candle, it was a heavy downtrend. If it wasn't because of this bullish candle, do you think you know this is an uptrend? No, you don't know. Why? Because it's still, sellers are still in control. So from here to high here. Why isn't it here? Because it's not the real resistance, right? The real turning point, the real point where price retraces, it was here. Here's the origin of the retracement. So again, come back to the fib, same thing as well. From the low to the high, that's the real turning point. That's the swing low, that's the swing high. Was this the real resistance? It's not. This is the place where price retraces all the way. So there it goes again. Price slightly broke under the 61.8, continue pushing higher. So on and so forth. So real support, real resistance. In this case, guess what? It didn't tap that 0.5, so it missed out the entry. So times where the golden zone or the sweet spot entry, the SSE, which is between the 0.5 to 0.618, it wouldn't work, are when things goes really heavy sell, right? Something like this, really heavy, it wouldn't tap. So I'll still say this, the fib, especially if you're using the same levels like me, 0.5 to 0.559, 0.618, it will only work when market is presenting a healthy kind of trend, so deep retracement. When price is on a pro trend, on a heavy sort of parabolic trend, you don't even need to use the fib. All you need to do is what? Use flag pattern, or the EMA's bounce. So these are patterns that really for you to capture those crazy momentum kind of setup. All right, the fib will only work, of course. On my fib, there's no 0.382, 0.382. Some people use that. Some people even use 0.226. I don't have these levels on my fib because I already noticed I don't even need them. It's just like an external, an extra confluence for me. I don't even need to use fib to trade sometimes. On a pro trend like this, fib wouldn't work. So don't even bother using fib when market is on a pro trend. Alright, just use your eyeballs and see, oh, if there's a breakout, just pray the break and retest. If price is holding above the EMAs, just continue chasing them. Alright, so you see, on a sort of just a grinding trend like this, fib retracement will not work. So don't use it. On a choppy market like this, please do not use a fib. On a ranging market like this, please do not use a fib. So remember, first thing first, fib is sort of a momentum indicator. So only use it when market is presenting clear momentum, clear direction. Fib is no way going to be the only confirmation that you use to take a position. Don't just look at the chart and say, oh, I draw the fib from swing low to swing high. Is at that golden zone, I take it. No, you need external confluence like the support and resistance, like the breakout structure, the BOS, like the EMA's cross. Once you add on these different confluence, fib is just like an extra thing. All right. So another thing is, never use a fib on a ranging market. It would never work. You are only going to kill yourself, just like the moving averages. If you use the moving averages on a balanced market, you're going to die. You're going to get slaughtered. Why? Because it's a momentum indicator. Okay. Also, fib will not really work when market is on a pro trend. You might as well just use flag just use BNR to trade. So that's pretty much it for the lesson, and I hope you all learned something new. Talk to you later. Bye bye.